So now finally let's dig into the inducement. So after we went into the basic journey, basic, until here, where it becomes very interesting and where the technically the real journey begins. And now we can dig into the inducements, okay? But still very basic. Of course, we will dig into inducements later as well, but just the basics of the inducements, right? So again, we talked a little bit about earlier of what these inducements are. Again, the inducements is the last impulse or a bribe actually even that gets people in the market or out of the market. Again, it can hit someone's stop order in terms of like a breakout trader, or it can hit someone's stop loss and he's just out, he's getting stopped out, and then the market can move in the other direction. So inducements always two different scenarios, right? Can people get in and can people out, right? So people are induced to do things all the time, right? That's why, again, retail strategies exist. That's why indicators exist. That's why smart money approaches exist. People need reasons. They need reasons to take on trade. That's why it's there. And the best trick about it is, again, see the pain inside the market to identify those inducements, right? So guess what? Same thing. We can use it for continuation or reversal, okay? But that's, again, where the fun slowly begins because we understand of what they do. If it's in continuation, again, they obviously show some sort of build up here for support trader, resistance traders, resistance, then building up here as well, maybe building a little channel, maybe even giving a Koch in here or something like this, right? If it's something like this, and of course, here's the Koch, but guess what? This is just an inducement to take people the wrong side direction, so we can continue higher. Same thing here, building again some sort of support or continuation traders just to take them out, continue higher. For reversals, obviously they're way easier to spot, right? And of course, that's when you have an area in here, huge, some sort of resistance in here, finally takes it out. Obviously, all the breakout traders getting into the buy side. Obviously, everyone who's sold in here is taking stopped out, and then we can look for a reversal, right? So again, continuation inducements make people think the trade is going to the opposite direction and then continues, and reversal inducements are making traders believe that the market actually continues. Okay, so when the world thinks the market continues, it will reverse. If the world thinks the market will reverse, it will continue. Okay, so guess what? Not a very easy form of inducement. And again, this is an example where literally every retailer is getting smoked left and right. And we love that shit. So it's when they're taking out the structure points to the high side, right? Inducing to the high side, and even this to the low side, even here, internal inducement, even this one's building it up in here. Like, look at it, how they're building up these crazy equal lows just to take it out later. Like, we love that stuff. And that's obviously stuff which you will learn how to trade it. Even here, building up the channel in here. Guess what this is? A smart money trap, right? And just to get into this extreme mitigations later, but this happens before channeling build up. Smart money traders getting induced here, taps into this one now finally, and then it can reverse, get to next liquidity areas. But don't worry, of course, we will show you exactly how to do that. Just be aware of the structural inducements. They're absolutely amazing, and the moment you get used to them, it's just over. Okay, you will have very much clarity. Even if this one looks really maybe confusing to you right now, again, it's just the beginning of something beautiful. Okay, so be aware that always these inducements, when they take out these major structure points, then a reaction can happen. Again, it's faking these inducement points, even faking even first. Again, their continuation, taking it out so they can continue. Channel buildup, taking out the channel to continue. Channel buildup, taking out the channel to continue. Right? It's always the same stuff. These huge channels in here never been taken out until one. Obviously, whoops, we should show you like a little bit smarter like this. Never been taken out to the high side. Of course, that's why the market will come back and take them out all. And obviously then target the overall direction. Now, obviously, everyone's getting side to the high side. So, of course, you can expect what happened next, right? So, guess what? Same thing all over again. And be aware slowly but surely of how they love to do it. Again, forming a channel in here, building what? Equal lows in here. Support traders getting excited, inducing the support traders, gives the reaction, comes back to this channel. Again, what is the initial purpose to do? Fairly deliver the market with this huge imbalances down there. But what do they do in the process? By building up a little cycle in here, right? And of course, they had huge buildups before that, never got induced to the high side, right? So guess what? It's all always inside each other, right? So this in here had this purpose of induce this bigger channel, but also had this purpose of mitigating and obviously fairly deliver price and filling the imbalance, right? So it's always inside all the time. And again, same thing, little channel in here, getting induced to low side, just to do what? Fair deliver price, filling the imbalances, and continues higher, taking out obviously now this liquidity to build up because it never got induced before. Okay, it's always building up, and taking out. Okay, that's an easy one. Again, if you see these triple tops in here, obviously comes even higher, it comes even 5 times back in here just to induce it with speed. Breaker traders, momentum traders are getting all excited, continuity traders getting all excited. Where's the liquidity buildups? Last thing in here. So of course, guess what? This is now again your inducement in here, right? So this is the push, obviously, that made the inducement. This is where we come in and say, okay, makes sense. There's your next imbalance zone. In here, there's the next break of structure. In here, this is the push that led to the high, obviously. Comes back, huge momentum to the downside, makes people all excited. Faking smart money trap to the, again, they're still seeing the buy channel, right? A buy trend, getting the reaction, they're getting all excited. The original target is obviously to trade away from the inducement, stop out all the liquidity downside. That's our proper mitigation in here where it makes sense after a break of structure, after the inducement. Look at the bigger picture. Okay, one more. Right, so guess what? Always the same. Always the same. If they want to, for example, continue lower, they build the liquidity first, take it out, continue lower. Build the liquidity, take it out, go lower. Always the same, over and over again. Just a nutshell again. Just a nutshell, always the same. Okay, again, stuff like this, absolutely hell for retailers. Again, how do they literally trade? How would they even make sense out of that? If they're looking for buy channels, new higher highs, that's the lows. Oh, new low, low, low. Okay, new higher high. Oh, new low, low. Oh shit, new higher high. Oh, new low, low. See, they're getting induced left and right, left and right. High, low, high, low, high, low. They cannot even get into the retail material anymore because stuff like this just smokes them left and right. That's literally retail hell right there, but our heaven later on. Okay. Then, of course, we talked about it. If you have some sort of inducement, again, they love to faking the reaction, induce it, then the high, giving some sort of break of structure, leaving imbalances in time, showing the liquidity downside, taking it out, showing the channel before that, right? Taking out the channel, building the channel in the process, with momentum and speed, mitigating away from the inducement, right? This was also something to the left. And then, of course, can continue lower, stuff like this, okay? So, but be aware also that, very important, inducements can happen to both sides. And it's, again, it can indicate a reversal or a continuation, right? So again, if they want to go higher, for example, or let's say, let's start with the reversals actually. Let's actually say they want to reverse. They show you the buy channel upside. They induce high with speed. And so they can obviously reverse it because everyone obviously thinks it's a continuation. But guess what? If they want to continue, they can make a continued reversal as well. They're obviously still showing the buy channel to the high side. Everyone's getting excited about the buy channel. But then, showing the inducement to the low side, people think, oh no, now it's a reversal, chochs, whatever, break of structures, blah, blah, blah. They're looking for sells in here now for continuation lower because it's a reversal. But obviously that leads to a continuation and they love to do this. So be aware that the inducement can happen in both sides and obviously both directions also. So it can happen to low side, buy side, of course. Sometimes doesn't need to necessarily mean that this channel has to look like this. But of course it also can look like this, for example, right? And then let's say it's a continuation again and induce high and then like this. Again, doesn't need to be this direction of the channel also. It can also be obviously sideways, induces high, then goes lower. right? If it's like this, continuation, you get the point. It doesn't need to necessarily channel upwards. It can channel downwards, still induce high, and then continue lower. Okay, but you need some sort of build-up before an inducement. Obviously, you have a build-up before an inducement, and then you can take the continuation also. It doesn't necessarily always be a reversal. Okay, the reversal technically, if you want to say so, is you're trading the reversal of this, but it's a continuation overall. Okay, so again, how does it look like? Covered a little bit. There's the trend line people see, or like this, depending on how you want to draw it, right? So there's multiple ways to draw it. Just to give you the easy example, shows this channeling upwards, induces the channel low side, just to do what? Continue higher, right? But first it induces the channel. So what does it look like in both directions of how I do it? And now look of how they do it inside each other as well. Here's the channel, never got induced to the high side. So guess what? They want to go higher because they induce lower first. Okay, then again, you know this is your inducement now. Finally, this is again where we can look at the whatever break of structure, because this is the push it led to it, leaves imbalances. Now it makes sense because they never induced high, they just built the channel high. Okay, now you have your break of structure internally after the inducement. Comes back, mitigates, lovely. But then what comes later? Building a channel, induces high, but is still in the bigger picture channel, right? If you look at this channel, it's still inside there. You see, this obviously led to a new channel. Okay, perfect, but induces this smaller channel. So of course, the smaller channel gets induced high. So obviously, boom, but it's still inside this bigger channel. So guess what? This is a touch again for trendline traders. So this is not an inducement. This is just obviously an inducement of this smaller channel, but it's still another trigger for trend traders to take a buy in here, right? So you see what I mean? So they're channeling upwards, inducing this channel with this push, but this push is still a trigger for trendline traders. So again, huge momentum to the high side now, making everyone excited. Everyone thinks now it's a continuation. So guess what? Inducement high, same thing in a different direction now. Building up the channel, channel's never induced to the low side. So guess what? Here's the channel inducement, also induced all the structure now to the left, makes a new low. So continuation traders or reversal traders think now this has to go forever to the other direction. But guess what? That's your channel induced to the low side this time. Some sort of internal break of structures you would have it. Never had it. Okay, perfect. And then this comes back, mitigates the extreme of the inducement, and then obviously can take out this high again. You see, it's always the same. Always the same. Okay. And again, how they do it, once again, channeling downwards, like here. Then there's the inducement, swoosh. Internal break of structures now. Now it makes sense because you have an inducement of a channel. Comes back into the next supply demand areas. Continues higher, right? Because again, look at the illustration, it's always the same. So what's going on here? Channeling high, induces into both directions. That's where it's a little bit tricky, right? Of course, that's where you can wait for other confluences of events later on. And of course, you can trade the continuation overall. But again, they can induce into both sides. Again, if it's in the beginning stage, just stay away from them, but just beware that we love shit like this later on. Okay, if they induce on both sides also. So then again, for the higher picture, so inducing high, of course, right? So inducing high in here, channel, build up, inducing high, right? Perfect. So guess what? Induces high to do what? Inducing this channel overall to the downside. The overall direction is a continuation. So this is the channel that first gives a last impulse to the high side, taps into the mitigation order flow, right? Of course, to continue a little bit higher. Right, as you can see here, that's outzoomed or inzoomed a little bit out of this one, right? So guess what? After this one, you're having a huge channel upside. Look at this. I mean, cannot be a crazier build-up than this, right? So never induce to the high side. If anything, induces to a low side in here. Can induce all this channel in here just to do what? Mitigate and fairly deliver price. And then, of course, taking out all this liquidity up in here. But first, again, never induce to the high side in here, just building up liquidity like crazy, and do slow just to go higher. Perfect.